Have you ever seen a stock that's just kind of sleeping, barely trading, pretty much forgotten by the market, and then one morning it just wakes up and decides to become a superstar? Well, let's get into the incredible story of a tiny health wearables company that just completely shocked Wall Street by turning into an AI giant, seemingly overnight. So this is the number that had traders absolutely scrambling. The company is Movano, and its stock, MOVE, just exploded by over 150%, and that was just in pre-market trading. Look, for a small, struggling company, a jump like this isn't just unusual, it is a full-on seismic event.
And it wasn't just the price. Get this, look at the sheer volume. On a totally normal day, maybe 27,000 shares of Movano get traded. But on this particular day, over 10 million shares. That's not a little wave of interest, my friends. That is a tsunami. So what on earth just happened?
And that really is the million-dollar question, isn't it? It's a true market mystery. How does a company that was literally on the brink of getting kicked off the stock exchange suddenly become the talk of the town? Well, the answer, as it turns out, has everything to do with one of the biggest names in tech.
Right. So the single clue that lit this entire fuse came from an announcement that, honestly, on the surface seemed to have nothing to do with Movano at all. It was all about its connection to a tech titan, Nvidia. Okay, so a private company called Corvex put out a press release saying it had gotten its hands on a whole fleet of Nvidia's H200 GPUs. Now, these aren't just any computer chips. These things are the absolute gold standard. They are the engines powering the entire AI revolution. By securing these, Corvex was basically telling the world it's now playing in the big leagues.
And what Corvex is building is something called AI compute infrastructure. You can think of it like selling the picks and shovels in the new AI gold rush. Having access to these top-of-the-line Nvidia GPUs means you are holding one of the most valuable resources in the entire tech world, period.
But here's where the story takes a really interesting turn. Corvex is a private company, right? And Nvidia made the deal with them, not Movano. So why in the world did Movano's stock go completely ballistic? Let's connect the dots.
The link, it turns out, is a clever corporate move that was kind of hiding in plain sight, a merger, one that was specifically designed to transform a company making smart rings into a cutting-edge AI powerhouse.
So let's just walk through the timeline to see how this all played out. Earlier this year, Movano was really fighting just to stay listed on the NASDAQ, so they did what's called a reverse stock split, basically a move to pump up the share price. Then, just last month, they announced an all-stock merger with this private AI company, Corvex. And now, Corvex drops the Nvidia bombshell, which sends the stock of its future parent company, Movano, straight to the moon.
I mean, this slide really just says it all. You're looking at a complete transformation. You've got the old Movano, making health rings, not much revenue, high risk, and it's becoming the new Movano, a pure-play AI infrastructure company plugged directly into the hottest sector in the market. That all-stock merger just means Movano is essentially using its own stock as money to buy Corvex, swapping its old identity for a brand new, exciting one. Okay, so we've got the catalyst, we've got the backstory. Now let's put it all together and figure out exactly why investors just stampeded into this one stock. It really boils down to three key things. First, this merger is like a backdoor for regular investors to get a piece of a promising private AI company through a public stock. Second, that Nvidia connection is everything. It screams legitimacy and puts the company right at the center of the AI wave. And finally, there's a technical reason. The stock has what's called a low float, which just means there aren't that many shares available to trade. So when a huge surge of interest comes in, the price has almost nowhere to go but up and up and up. But hey, before anyone gets too carried away, we absolutely have to look at the other side of the coin here. Because this story, as exciting as it is also packed with some pretty big risks. Yeah, it's really critical to keep these risks in mind. For one, the merger isn't even a done deal yet. It could still fall apart. This is also a highly speculative bet on a future promise, not on any actual revenue from this new AI business. And since it's an all-stock deal, there's a really good chance the company will issue more shares later on to raise money, which could water down the value for everyone who owns it now. And all of this brings us to our final thought. The story of Movano is just a fascinating example of how today's markets work, where a powerful story can be just as valuable as actual profits. But it leaves us with this one huge question. Is what we're seeing a true reinvention, a real glimpse into a valuable future? Or is it just a speculative frenzy, a bubble built on hype that could pop just as fast as it inflated? Only time will tell.